What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be talking about Google, and Google is one company that hasn't been very affected by the recent economic concerns. However, there are concerns that are being brought up by the FTC as to whether Google is a monopoly or not. So what I want to do in this video is I want to take a look at those concerns. I want to dive into Google's market share and how it compares to some of the other players in the industry, and then we'll take a look at their revenue, their EPS numbers, their valuations, and where I think all those numbers could be headed in the future. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at how Google has performed over the last couple of years. If we look year to date, Google is up over 50%. However, over the last year, it is up only 39%. And over the last 5 years, Google is up almost 150%. However, from its all-time highs of around $150 to where it is trading at now, the stock is actually down around 7.5%. And we saw Google, like the rest of the market, have a very rough 2022 as the stock moved down over 40%. A lot of this 40% move down had to do with economic concerns around the raising of interest rates. However, we also saw Microsoft partner with a company called OpenAI to release ChatGPT, and ChatGPT was seen as a major threat to Google's business. In 2023, we have seen inflation start to cool off, and that has resulted in a lot of these companies moving up in a major way, especially for Google. From its lows of December 30th to where it's trading at now is up over 55%. One of the biggest concerns right now around Google is how the FTC will regulate or potentially regulate the business, because they are looking at it right now and trying to determine whether it is a monopoly or not. The Justice Department's case targets Alphabet's search engine business, which it alleges maintains a monopoly by paying rivals to make its search engine the default on web browsers. The US wants Alphabet to change its business practices and potentially pay damages and restructure itself. So personally, when I look at this case, I don't think there's a lot of merit behind it, because the issue that Google runs into is they don't have a very large device network. They have the Google Pixel, and then they have Google Chromebooks, and those are really the only devices that they offer. So that forces them into the situation where they now have to be paying other companies to make their browser the default browser on their devices. And really, Microsoft could do the same thing with Bing. They could push it out to a lot of different companies and hardware. However, they haven't done it as effectively. And we've also seen companies like Apple with Safari have that as their default browser. So Google is actually in a very disadvantaged position because of the lack of hardware that they actually own. And Google's search engine business hasn't been untouchable, as we have seen Microsoft actually roll out ChatGPT, and this slightly affected some of their market share. We've seen Google hit a market share of around 84%, and Microsoft's Bing has gone up to around 9%. And here we can see some of those numbers graphically. In 2019/18, we saw Google sitting at around a 90% market share, and Bing was only sitting at around a 4% market share. However, since then, Google has actually gone all the way down to where it's sitting at now of around 83 to 84% market share, and Bing has risen all the way up to almost 10% market share. Even though losing market share is often seen as a bad thing for companies, this could actually be a good thing for Google, as it could avoid them being split up due to them being seen as a monopoly. And with such a strong search engine business, Google has formed a very stable earnings base, and we could see that through this statement by co-chief investment strategist at John Hancock, where he says if you are looking at stability of earnings, Alphabet is right near the top of that list. It is a major quality stock, and given that it is trading a bit cheaper than peers and should be a major player in AI, it is hard not to like the relative value opportunity. And we can see the strength of Google's numbers in both their top line and bottom line numbers. Here we have Google's revenue over the last 5 years, and at the end of 2018, they were bringing in around $137 billion of trailing 12-month revenue. However, now they have grown that number all the way up to $289 billion of trailing 12-month revenue. We do see their growth slowing slightly. However, a lot of companies in this market have actually seen negative growth year over year, and for Google, we have not seen that happen. They did experience 1% growth year over year in December of 2022. However, they are starting to bring that number back up, and they are seeing around high single-digit growth numbers right now for their top line numbers. And we can see the same strength in their bottom line numbers. Here we have their EPS numbers, and we can see at the end of 2018, they were bringing in around $2.19 of trailing 12-month EPS. And by by now they have grown that number all the way to $4.72, which is down from their highs of around $5.60 of trailing 12-month EPS. However, if we look at the quarterly basis numbers, we could see that they had a low here around September of 2022 of $1.06 of EPS, and we're starting to see them revert back up, where their latest quarter was $1.35 of EPS. And analysts are projecting this growth to continue over the next couple of years. On Yahoo Finance, we can see that there are 46 analysts covering this stock, and they have an average EPS estimate of $5.66, which would be very solid growth from a year ago where they brought in $4.56. If we look at the low EPS estimate, we can see that it is coming in at $4.85, and the high estimate is at $6.40. And for 2024, they project that growth will continue as they have an average EPS estimate of $6.70, a low of $5.52, and a high estimate of $7.45. And for top line numbers, analysts are projecting growth as well. They have a growth rate of around 7.6% for the current year, bringing revenue up to $304 billion, and they have low double-digit growth of 11.4% projected for 2024, which would bring revenue up to $339 billion. One of my favorite valuation metrics is forward PE ratio, and if we look at Google, we can see that they are currently trading at a 20.58 forward PE ratio. If we compare that to a year ago, they were trading at a 15.85 forward PE ratio. So they are trading up, and that makes sense because we have seen the price move up in a very significant way. And if we look at Google's trailing 12-month PE ratio, we can see that on average over the last 10 years, they have traded around a 29.12 PE ratio. If we look at where they are currently trading, they are currently at a 28.9. So they are very slightly undervalued compared to their historical average. However, I would just say that it is at a fair value right now compared to where they have traded over the last 10 years. And this chart shows a really good representation of Google's PE ratio over the last few years. We can see that last year, the earnings, which are shown in yellow, were dropping slightly. However, the price for Google was dropping in a very significant way, and it bottomed out here where they were bringing in EPS numbers of $5.08. However, the price dropped all the way down to $95, and that was equivalent to an 18.83 PE ratio. And even though we saw earnings drop again, we saw the price level out, and that brought up the PE ratio to a 19.22. And however, since then, we have seen the price shoot up in a major way, even though earnings has relatively traded sideways. So personally, I do own shares of Google, and I like the company because of the strength that they have in the search engine business. And if we start seeing that being regulated away, I would have to reevaluate my position. However, right now, I don't think the FTC has a very strong case. I think if they were to implement regulations against Google, it would have a very positive impact on businesses like Apple and Microsoft. And I think the FTC would have to step in and start looking at those businesses as well because of the strength that they have in their own industries. But in my opinion, I don't think there is going to be a whole lot happening. I think the FTC is looking at a lot of businesses right now, and they are trying to evaluate if they are monopolies just to really strengthen the overall economy and try and do what they can to mitigate some of the concerns around job losses and other things. So that is all my opinion though. Do not buy a company just because some guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.